Welcome to Live Insights. I'm Richard Mason with Oil and Gas Investor. We are here to visit with Tim Loser, Vice President of Business Development at Energy Navigator. We're broadcasting from NAPE, where oil is at a 9-month high and natural gas is at a 10-year low, but business is really good. Tim, I wonder if we might begin with a little description about Energy Navigator.
Well, thanks, Richard. Energy Navigator is a software company formed in Calgary about in 1998. Really formed out of the frustration with what was available to the current market, and our mantra is really we're going to find a better way, and that's really how the company got started. So we focus on two software packages, AFE Navigator and Value Navigator, but they're both really around oil and gas asset management, trying to help oil and gas companies make better decisions.
You know, what we might do is discuss these in a little more detail. I think AFE, most people understand what that is, but tell us how that's a solution.
Yeah, AFE Navigator is an AFE management system. It goes really beyond that to capital tracking and really helping clients get an understanding of how their expenses are going, what's going to be expended in the near future. So it's really about the control and efficiency of moving an AFE through the company, from the AFE being born to going through the approval and review process, and then finally to tracking the costs after the fact. And each company takes a little bit of different type of value out of a system like that. For some, it's really the control of their costs and being able to talk with their investors and their employees about where the costs are coming from and where they're going. And for others, it's really about the efficiency of moving the AFE through the system.
So you can kind of monitor and make the adjustments as needed to understand exactly how your costs are being impacted in basically real time.
Exactly. So when you'll know, you have complete visibility of where the AFE is in the process, what costs you expect to see coming in and going out over the near future, and then really just track that AFE through its entire life until it's closed.
So this is a very dynamic industry right now. Services prices changing very dramatically.
Exactly.
Daily.
Exactly. It's very interesting, and unconventionals has really changed the dynamic even amongst just on the AFE side, where now it's about the efficiency of drilling these wells as opposed to necessarily picking all the right spots perfectly. So AFE processing is really part of that efficiency.
Yeah, we might look at that because unconventionals have changed the entire nature of the game. And, you know, the ultimate goal of that, the holy grail, is to get to that resource manufacturing stage where you can capture economies of scales and so on. And
Certainly the AFE process is a big part of that, being able to efficiently move those through the system and track those costs. It's part of that manufacturing system getting good at manufacturing new reserves.
We also might look at the other software package you'd mentioned, which is the Value Navigator.
Right. So Value Navigator is it's going to be new to the U.S. market, but it is the established standard in the oil and gas market in Canada. It's a reserves evaluation and economics system. So it goes all the way from doing your forecasting of wells to generating the economics, and then finally going all the way through to a certain amount of reserves management. So, and that's really being rolled out in the U.S. Over the last 3 years. So we're starting to see a big uptake on that. But unconventionals have presented us and the whole industry with a whole new set of problems, and we're really enjoying the opportunity to attack those. So we've put some new tools in there for type curve comparisons, for evaluating new evaluation techniques such as stretched exponentials. So we're really doing a lot of research to make this a better tool for the unconventional market.
Are there any differences between the Canadian and the U.S. market? I might comment first that we see a lot of technological innovation come out of Canada. In fact, the low gas prices from earlier this decade, prompted people to use some of the unconventional techniques and more conventional oil drilling. We now see that entire process spreading through the U.S.
It's interesting that from a software standpoint, how much technology actually comes out of Canada down to the U.S. There's a general culture of experimentation, but also Alberta, the province of Alberta, has inadvertently helped everybody because they made their economic system so complex. So economic softwares are required up there to be able to do these things. And now we're starting to see the same types of trends in the U.S. as well. The differences between the market, of course, there's some culture differences, but the transition to the market has really been very well received. So.
I think in the U.S., the primary answer to any question you can bring up is bigger iron, whereas in Canada, it's more finesse.
Well, certainly, And there's certain and the people aspect comes into play as well. And the other part of that makes Canada unique to the U.S. is all the companies are within a 10-block radius in one city, whereas in the U.S. everyone's spread out, and the knowledge transfer from company to company seems to be a little bit more open in the Canadian market as opposed to the U.S. And I think that we're starting to see that wall come down too, just through the use of the social media.
Again, we might explore this unconventional evolution or revolution that we're seeing again, and how your product is a solution for some of the unique problems that come as a result of this transition that we're seeing.
Exactly. So, Value Navigator in particular, we've put a lot of money recently, or resources recently, into how do we better forecast these unconventional wells. We know that to forecast these new unconventional wells, say in the Wolfcamp or in the Eagle Ford or for the Marcellus for that matter, require these steep declines followed by what we call super hyperbolic decline followed by an exponential tail. The real challenge has been, when do we transition from this hyperbolic decline into this exponential tail? And so there's been some new techniques proposed by various universities, and we're certainly researching those, but we've put a lot of effort in how do we do those forecastings. Do we do them, and we put just recently we did a step change in auto forecasting, so we can now forecast thousands and thousands of wells in just a matter of minutes and have realistic technical reserves. And that really aids in the process of evaluating a large number of wells quickly. Next comes, what forecasting technique do you use? So we're now implementing these new techniques that are coming out of universities. So Strex Exponential, there's a new Duong method coming out of Canada. All those things are really starting to roll into our software as well. And it's really going to be a step change in how you forecast reserves and unconventional resources.
It's very important too from an investor standpoint, because a lot of the decline curve is still theoretical. We haven't had enough time, enough data, and so on. And so a little bit of change creates a wide variety of potential outcome. And if you're an investor, how do you evaluate a company?
Well, even beyond the investors, what's the SEC going to do? So we know that there's a general perception that ARPS forecasts or hyperbolic forecasts are too optimistic for the reserves that are coming out. And these new techniques, what's the SEC? How are the investors going to receive these? Yes, they are generating smaller numbers, but are they the right numbers? And that's really the key that we're hoping to really uncover as we get a little bit more history in these new plays.
In terms of your customer set, do you find smaller E&P firms, larger publicly held firms? They tend to be the more active in the unconventionals because of the large capital requirements. But I mean, who's an ideal customer?
Ideal customer for us, really, for AFE Navigator, you're looking at a middle tier type of a company, and I don't want to start putting names out there, but you're looking at someone who may be doing anywhere from maybe 10 to 20 AFEs a year, all the way up to 2,000 or 3,000 AFEs in a year, or beyond. For Value Navigator, it's really the full gamut, from small consultants to the one-person shops, all the way up to the large independents. And we're going to start to see, we're focusing, personally right now, we're focusing on the smaller companies as we grow into the market, but the larger companies are certainly quite useful in that as well.
We've seen a lot of joint ventures and business alliances between partners. Sometimes they're a U.S. firm, but they have, let's say, a Chinese partner or a European partner there. Does this, and both of them in a way may have different needs for information. Does this help solve that cultural, I don't mean to say cultural, but organizational challenge?
Well, certainly on AFE Navigator really aids in the communications between companies within the company. Value Navigator is generally used by engineers and technicians and really help to generate the numbers that need to move back and forth between the companies. So it's really aiding in creating a culture where we're comfortable with the reserves numbers that are coming out of the system, as well as the costs that are coming out of the system. So that really helps the communication between these companies. And of course, numbers bridge across cultures pretty well.
Mm-hmm. Absolutely. I'm wondering, a lot of this type of information in the past in terms of reserves valuation and so on has sort of been outsourced to third-party engineering valuation firms. Is this a disruptive solution that competes with those types of firms, or does it work in tandem?
Well, actually, and if we look at use Canada or Calgary as a guide, the reserves evaluators, the third-party consultants, have actually been one of the catalysts for introducing Value Navigator into the system. So I wouldn't say it's been disruptive to them. It's actually been aided, because what we do for the operator actually helps the third-party evaluators at the same time. So I think we look at them as partners, and we look at them as valued clients of the software as well.
So what are you seeing at NAPE so far?
Well, it's always fun to come to NAPE. There's, as a software vendor, it's nice to be able to go and see our clients and customers or potential customers manning a booth. It's kind of flips it around a little bit, so it's kind of fun. And it's really nice to see the excitement. And you see the emerging plays here. This is where you run across what's going to be over the next year, what's going to be hot, what's new, what are the problems. So this is a great place for us to come and really learn about what's going on in the industry. And then, of course, we get a chance to really mingle with our customers in a different way. So it's really a nice place for us to come.
Your views on the industry? We've had natural gas prices drop. You've all been through that in Canada previously. What kind of perspective can you share with us as to how to adapt to that situation?
Of course, I heard the low gas costs being a self-correcting problem. I'd love to see the costs come down enough where we start to see experimentation and what's going to happen in the market. So we see the CNG Camaro driving around the show floor here. So I think that it's going to actually, for the country, is going to provide some catalyst to see new things happen and ultimately increase demand. And of course, low gas prices has affected everybody, but fortunately, we've got higher oil prices that really help keep the capital dollars moving around. And then seeing the shift between, shift to liquids, back to gas, back to liquids. So it's kind of interesting to watch.
Certainly, liquids provide that nice premium for natural gas. If half of your production, or even 40% of your production, is liquids based, you can almost produce the gas for free.
Yeah, well, absolutely. And we just driving in here this morning, I was actually thinking about it. We got the price of gasoline, and I know I've got the CNG Camaro next to our booth. It would have been really nice this morning to have been driving in with a CNG truck as opposed to a gasoline truck. So yeah.
Calgary, you might tell us a little bit about the business environment there. As a software company, are you miniature Silicon Valley, as they would say? Or?
I don't know if I'm going to go miniature Silicon Valley, but certainly in the oil and gas industry, there's a lot of technology being developed in the Calgary market, and it's fun and exciting to be there and see that, and of course then let that grow out into the U.S. as well. So it's a fun environment, and then again, that knowledge transfer capability. There's so many people within just a short area to exchange information with, and a very big openness to do it. So I don't know about mini Silicon Valley, but certainly a lot of development going on there.
In terms of, so many companies operate cross-border, but how are you finding your reception here in the U.S.?
I would put it very well. There are some challenges in moving across the border and growing a team. Our biggest problem right now, sometimes it's really finding the resources, the employees to do what we need to have done. But the transition has been very good, and our software has been very well received. So I'm very happy with the progress.
Anything else you'd like to highlight?
Well, I think we're looking forward to the challenge over the next several years to see our software get placed into the industry, and we're very excited about which direction the industry is heading in, and we're hoping to be out in front of that.
Well, Tim, I thank you very much for appearing here as part of Live Insights with the Oil and Gas Investor. Hope you have a great show at NAPE, and hope your stay in the U.S. is warm this time of year and inviting.
Okay, and thanks, Richard.
So I guess at this point we'll just